All right, let's talk about it. The AI revolution is in full swing. And for investors, it feels like a modern day gold rush, right? Everyone's rushing in. But with all that hype, all that noise, how do you even begin to figure out where to actually put your money?
And that's the question on everyone's mind, isn't it? If you're looking at the future of your portfolio, what's the play? Do you go all in on the radical, risky upstarts? Or do you stick with the big, established giants? Maybe there's another way entirely. Honestly, the choices can feel pretty overwhelming.
Well, today we're going to try and cut through some of that confusion. We're going to break down the playbooks of four of the biggest names in tech investing. We're talking four-star managers, four giant funds, and you guessed it, four radically different answers to that one big question. So, let's meet our contenders. In one corner, we have the disruptor, Cathie Wood. Then there's the tech bull, Dan Ives. After him, the macro strategist, Tom Lee. And rounding it all out, the institutional powerhouse, BlackRock. Four funds, four totally different philosophies. Okay, first up, Cathie Wood from ARK Invest. Her whole philosophy? It's all about betting on the far future. I mean, she's not just looking for the next big app. She's hunting for technologies that are going to completely rewrite the rulebook for entire industries. Think big, big picture. And her main fund, ARKK, is the perfect example of this. We're talking about a high-stakes, super concentrated bet on things like genomics and robotics, stuff that might take a decade to really pay off. And all that crazy volatility? To her, that's not a bug, it's a feature. It's the price of admission, as she calls it, for a shot at mind-blowing exponential growth. All right, now let's do a complete 180. Meet Dan Ives, the ultimate tech bull. His philosophy is the polar opposite of Cathie Wood's. He's basically saying, forget the startups. He argues the AI revolution is going to be a story of the big dogs, the established giants, just flexing their muscles and taking over. So naturally, his ETF, that's IVES, is like a greatest hits album of today's tech titans. Think Apple, Microsoft, NVDA. He's betting that the companies that already have the platforms, the mountains of cash, and millions of users are the ones who are going to win this AI race. It's a way to get exposure to innovation, without walking the tightrope of betting on companies that aren't even profitable yet. Okay, our third contender, Tom Lee, plays a completely different game. He's a macro strategist. That means he's looking at the world through a super wide lens. He's not just a tech guy. He's looking at the big picture, demographics, government policy, economic cycles, and trying to find companies that sit right at the intersection of all these powerful trends. And what you get is his fund, GRNY. It's a much more diversified portfolio, and it's definitely not just a pure tech play. His rule is that every single stock has to check multiple boxes, aligning with these big macro themes. He's aiming for that durable, long-term growth. He even calls his strategy the granny shot. Like in basketball, it's not flashy, but it's a high-percentage, reliable play. And last but not least, we have the institutional powerhouse, BlackRock. For them, AI isn't just another tech trend. No, it's a mega trend, a foundational shift that is going to reshape, well, pretty much everything. And their approach? Exactly what you'd expect from a giant like BlackRock. Systematic, thorough, and totally all-encompassing. So their fund, BAI, is designed to be a core holding for anyone who wants broad exposure to AI. You've got a whole team of BlackRock's top researchers driving this thing, and they invest across the entire AI tech stack. We're talking from the computer chips, the hardware, all the way up to the software and the apps that run on top of it all. Okay, so there you have it. Four really different philosophies. But that's all just talk, right? What does it actually look like when the rubber meets the road? Let's pop the hood and see what these funds are actually buying. Wow, okay, this table tells you almost everything you need to know. Just look at RKK's top spots. Tesla, Roku, CRISPR, pure disruptors. Now glance over at IVES and BAI. It's the AI titans, right? NVIDIA, Amazon, Alphabet. But then there's GRNY. How interesting is that? You've got chip companies and then PNC Financial, a big bank. That just screams macro strategy, doesn't it? And this chart right here really drives home the idea of conviction. Look at ARK. More than half of the entire fund is packed into just its top 10 stocks. That is a massive all-in bet. IVES isn't far behind either. But then you see GRNY, way down at less than 30%. That tells you it's a much more spread out, diversified game plan.
This idea of concentration, of making big bets, leads us right to the next big topic, risk. And one of the simplest ways to see the risk level is to look at the size of the companies they're investing in. What the pros call market cap, which is really just a fancy way of saying how much a company is worth on the stock market. And for ARKK, the risk profile jumps right off the page. A full third of its portfolio is in small and micro-cap stocks. Now, these are the companies that could potentially go to the moon, but they could also crash and burn. We're talking huge growth potential, but also a ton of risk and gut-wrenching volatility. Now, look at the difference with IVES. It's almost 97% large-cap companies. We're talking about the established blue-chip giants. This is a strategy designed to cut out almost all of the risk that comes from betting on smaller, less stable businesses. And Tom Lee's GRNY? It's even more conservative on this front. Practically the whole fund is in large-cap stocks. This fits perfectly with his whole granny shot philosophy, right? Just focus on the reliable, high-quality, established leaders. BlackRock's BAI kind of carves out a middle ground. It's mostly anchored in those large-cap leaders, but because it's a global fund, it has the flexibility to go out and find some promising mid-sized innovators from all over the world. It gives it a really interesting and unique balance of risk and reward. So, here's the bottom line. You're really looking at two totally different types of risk. With ARKK, you're taking on what we can call disruptors risk. You're betting on a future that hasn't happened yet, and your returns can swing wildly based on market mood. On the other side, with IVES and BAI, you're taking on leaders risk. You're betting that today's giants will stay giants, which means you're really exposed if the whole tech sector takes a hit.
Okay, but there's one more piece to this puzzle, and it's a really interesting one. Let's call it the famous founder effect. Cathie Wood, Dan Ives, Tom Lee, you see these faces on TV all the time. So you have to ask, does being a celebrity manager actually help?
It turns out there's a pretty clear playbook for becoming an ETF star. Step 1, you build a simple, compelling story, something like disruptive innovation or the AI revolution. Step 2, you get on TV a lot and become that go-to trusted voice. And step 3, you turn all that fame and recognition into a tidal wave of investor cash pouring into your fund. But this whole founder effect thing is a real double-edged sword. On the one hand, a big brand and a clear story can make complicated stuff feel simple, and that builds trust. But the flip side is that all the media hype can attract what they call hot money, investors who are just chasing the latest trend and will bail at the first sign of trouble. And that can make the fund even more volatile. Here's the most crucial point, though. Being famous is a great marketing tool, but it tells you absolutely nothing about whether the investment strategy itself is actually any good in the long run. So when you boil it all down, each of these funds is way more than just a list of stocks. It's a worldview that you can actually invest in. Do you believe the future belongs to the radical upstarts, and do you have the stomach for the roller coaster ride? Well, that's ARK's vision. Do you think today's tech giants are just going to get bigger and stronger? That's the bet you're making with IVES and BAI. Or do you believe the big, slow-moving economic tides are what matter most? Then GRNY's diversified path might be for you. The market rewards conviction for sure, but it also tests that conviction like you wouldn't believe. So the real question for you isn't just which fund will do best, it's which vision of the future do you believe in?